Hey everyone, welcome back to Corporate Decoder. Today we are diving into a corporate report, and let me tell you, it's juicier than the office gossip after the company holiday party. You won't believe what we dig up regarding mergers, money moves, and a whole lot more. This filing covers Renasant Corporation's amendment to a previous report about their merger with the First Bank shares. Basically, they're giving us the financial details after announcing the big news. It shows how the two companies would look if they were already combined. Hold on to your hats, it's about to get interesting. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, so come join the fun. So Renasant Corporation, which we will call Renasant, and the First Bank shares, or the First, agreed to merge back in July 2024. This report is an update, an amendment to a previous one filed around April 1, 2025, regarding the finalization of this merger. This filing explains why they're giving us the financial information late. Basically, Renasant said they'd provide the financial details, what's called pro forma information, within 71 days of the original filing. This amendment is delivering on that promise by providing a look at the combined financials. Now, it's really important to understand that these are projected numbers. They're not saying this is exactly how things will be. It's an estimate of what things would have looked like if the merger was already complete. This is just for informational purposes, and the real results might be different. Don't treat it like a crystal ball. Let's dive right into the numbers. This section is all about the money. We're going to check out the unaudited pro forma combined balance sheet as of December 31, 2024, and the income statement for the year ended December 31, 2024. Think of the balance sheet like a snapshot of what the company owns and owes at a specific moment with their assets, liabilities, and equity. The income statement shows how much money the company made or lost over a period of time, like a video of the company's financial performance. Okay, let's look closely at the assets, which are things the company owns. Cash and cash equivalents are at about $324 million, which is the amount of ready money they can quickly use to settle their obligations. Total loans are at about $6.6 billion, which is a really massive amount. On the liability side, the total deposits are at $7.1 billion. Basically, this is money that customers have deposited in the bank. Total liabilities are at $7 debts and obligations the company has, and it's quite a bit of money. Finally, total equity amounts to around $968 million. Equity is the owner's stake in the company. It's calculated by subtracting what the company owes from what it owns. Switching gears over to the income statement that shows the company's performance for the entire past year, the interest income totaled $400 $3 million. This is income the company made from interest, primarily on loans. Let's look at the interest expense, which is the cost of borrowing. The total interest expense is $90 million. The net income, which is the profit after all expenses and taxes are paid, is about $231 million. Last but not least, this exhibit just states how the cover page of the report is formatted. Technically, it is formatted in an inline XBRL, which, if you're wondering what that is basically a format that is used for making financial data easily readable by computers. Now, what do these numbers really tell us? If you look at the financial statements, you'll notice that the combination of Renasant and the First has created a bigger bank with substantial assets and deposits. However, with the liabilities at $7.7 billion, Renasant has debts and expenses to manage. The positive net income of $231 million is a green flag that the combined company is making a decent profit after covering its costs. Looking at Renasant, they're clearly trying to grow through mergers, but with high debt, there is a risk from potential financial downturns. They have to be careful to not take in too much debt. One thing that stands out is the importance of managing risk. They need to balance growth with careful financial planning. If Renasant can navigate these challenges, they could become a major player in the banking sector. Otherwise, they might just stay a mid-sized bank. Alright, that's our breakdown of Renasant Corporation's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to join our community on Discord in the description. Thanks for watching, and see you next time.